Good day, all. Ira Epstein with your metal market wrap-up, and this wrap-up is for Tuesday, and we're at the 11th of January 2022 at 6 p.m. So the gold took off today into the 1820 area. Why? Because Fed Chair Powell admitted that the Fed had it wrong due to the pandemic, no experience with the pandemic, on curtailing inflation. And when the gold heard that, the gold market was able to break out to the upside. You can have your own takes on it. That was my take on it when I was listening to that going on. So the Fed is saying clearly that, yes, there'll be more interest rate hikes. He said, and very carefully in front of his testimony today in front of the Senate Banking Committee, Mr. Powell said, yes, some of his members are pricing in 3 hikes right now. When asked what he thought, he said, well, I think it's going to be data dependent. Keep in the back of your mind, all the members can vote any way they want on this block. At the end of the day, the Fed chair does not listen or does listen as he decides. He is the casting vote. And when I hear the word he's still going to be data dependent, it tells me he's still maintaining the independence he has since he's taken this office. We'll see what happens. I like that he has an open mind on that. When asked about the balance sheet runoff, well, that's not baked in on anything. And that helped the stock market then rally in part. Now, you're pretty stable tonight after good rallies in the energies. They exploded. You realize you're sitting here at $83 in Brent. Crude is pushing the $81 level. And barely a rally in the notes and the bonds. So they're still keeping interest rates very high. When you're taking a look at the weekly chart of closes, the bias is up. What is bias? I define bias this way. You have to have some number where you can figure out on a chart what is a upside bias, what is a downside, in order to use it as a filter on other parts of your technical tools. So I choose the 18-day average of closes. And when the market is over it, I have an automatic upside bias. In other words, if other technical indicators are saying buy, I'm buying. When it's under it, I'm looking for sells. I cannot get, if you think about this, a buy under that number or a sell over it. The bias is up or down. I can come out of long positions or short positions in the way that I've built my trading model, but not trying to pick a top. Why do that? That you're fighting the bias. When you look at the chart, though, have you really gone anywhere? No. You're stuck here still from the 1820s back down to the 1770s and sort of just meandering back and forth. The rally right now, okay. The last rally high, I might not have this right, or maybe I do. The last rally high was up here at 1830.7. The market has rallied back, as you can see. It has not cleared that number. So the pattern is still lower highs, lower lows, a downtrend. I think you'd agree with that. If you define a trend as a downtrend having lower highs, lower lows, well, then it's very, very hard to say it's anything but that right now. Now, where the market often fights battles are key moving averages. I plot 3 of them on here for you. The 100-day, the 18-day, and the 200-day. The market fell back into them, and it's staying above them. So the bias is up. The trend is defined by the pattern of lower highs, lower lows is down. And the Bollinger Band resistance is right in front of you at 1830.10. And you tie that together with momentum, and you still have nothing. You have a chart that is spinning in here, and traders looking for that big breakout, that big move, haven't caught it yet. Let's assume the market off the inflation data in the morning. At 7:30 a.m., we get the all-important inflation data. It's got a 7 handle on it right now, a 5 and a 2, okay? So with that handle, if the market's stronger than that, obviously the trade is going to say, oh, I got to own gold, this inflation's running away. If it's less, well, why am I up here? Maybe the market's not as bad as we thought. That's going to be that momentum play that you get at 7:30. Got to be up and watching that. The gold-silver ratio still favors gold being stronger than silver because the ratio is over the 18-day moving average of closes as well. And when you look at silver, you're still in a downtrend. All it did is rally up to the resistance. While I don't think you're getting aggressive short selling, here is this reason. Where would you put a stop if you did it and you sold, let's call it the 22.79 level? If you put it up here over that last high, it's 22.30. That's a big risk. I don't think you're attracting a lot of money in that. In the copper market, as nice as this has been, I told you I thought the arms of the slow stochastics were going to wrap in around this pricing, and it is. The market's also caught between the 100 and the 18-day average of close. Like gold, you've got lower highs, lower lows, buy us up. Today there's articles coming out in Bloomberg. I was just reading them a few minutes ago, talking about the Omicron, and if China stays with the zero tolerance policy, what does that mean for factory work, and what's it going to do to the supply chain? Well, I've been talking about that for a long time, so they didn't teach me anything new in that article. In the platinum market, there is no trend. You are caught between the higher high, lower low. You've narrowed in the Bollinger Bands. You seem to be hunkered in against this 18-day average and just not going anywhere, whereas the platinum market is still in an uptrend. I think the pros bought it today at the 1885 level. They don't want to see it, in my opinion, get under this break low of this day, which was 1840. That's still a heck of a risk, don't get me wrong. It's fun to look at this. I don't know that I have the tolerance for that. If they get a move that comes alive, they'll be looking at the 203.75 level. Now, I do think the platinum and palladium, the real story isn't inflation for them. I think the real story is what's going to be with the automotive industry. Can they start getting enough chips to have the demand for these cars? We know the pricing power is there on new cars. We know that they can absorb the price of these metals. The key is, can you get the cars built? Last, when I go to the dollar index, you can see the lower highs, lower lows. Now, you've hit your downside targets as far as I'm concerned. You're oversold. Today's low is 95.57. The Bollinger Band's 95.54.5. 3 more ticks. You might get it. But you're in that zone where I think the market's going to find its legs against that. Why? Well, that's because what I teach in my new course, my enhanced Bollinger Band course, takes you from where a Bollinger Band might be hit, and that's going to be the key, to what it does. I use moving averages, the Bollinger Bands, and a momentum index. I tie the three together. So it's not just about the Bollinger Band. It's about hitting it under certain events taking place. And do you come out of a full position? Let's assume you're bullish, you go to the top band, or do you take off a part of it? 13 videos. You get our charting software with the 14-day trial, so you get to see it all work. You get to see when you come in with that 14-day trial in the mornings, you get to see what my paid subscribers get to see. They're buying my morning videos, and they're seeing me use those bands and how I talk. So while the course uses, obviously, some past data in it, I bring you up to date so you can see how to use them every single morning while you've got this for 2 weeks. It's not expensive, my friends. The charting software alone is a $60 value. The morning subscriber video for the futures is $15, and the whole course is under $100. You got quite a bit of value. How do you get it? Go to the website, go under the word education. That'll do it. It's all there. You sign up for it right up there. You can always call my staff if you have questions. You have a great day. I'm Ira Epstein.